Well, good morning, everyone. I hope folks are doing well. Good morning, good afternoon, good evening to traders around the world. Welcome to your North American Into the Open session here with me, Z. I hope folks are doing well. Looking forward to trading at all-time highs. We've got a market that's risk on. Oil came down again. We've got the euro keeping the dollar under wraps. Maybe it's the yen doing so. Precious metals are starting to glow a little brighter, and the Nasdaq is leading the S&Ps. Let's get right into it. A very good morning to everyone writing in, everyone here. I hope folks are doing well. I'm seeing so many people just write in a hi and hello. I'm not going to name individual names. I'm just going to say a very good morning, good afternoon, good evening to each and every one of you. I hope you and yours are doing well. Let's have a great day in markets. Let's get going, folks. Everything that I do and say here is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward. Risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. Whether I'm discussing past trades taken, doing live trades in front of you, coming up with plans and projections for future potential trades, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account, it's all done for education and insight purposes only. It's not meant as advice. Finally, if I poll you in the chat and I give you an average response back to the poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. All right, let's get right into it. So we can start off actually with the plainclothes charts. Let's get right into where we are located at a market level. A couple of things, maybe even before that. We're near all-time highs. If you look at the continuous contract for the ES, we are at all-time highs. Against the U contract for the ES, we're very close to all-time highs. The all-time highs being made as of the 2nd of June at 76.93 and 3 ticks. Now, before we get into levels, directionality, continuation of this move up, let's just understand the couching that's supporting this market. So oil is certainly down. It's down another 3 1/3% at this stage. Yesterday, it ended up down about 5.1%. So it's down another 3 1/3% on top of yesterday's down. So that's certainly a geopolitical positive. We're seeing that coupled with the euro largely holding up. The last I looked at it, it was indecisive. There it is. We had a breakout above the downtrend channel that you see on screen. And we know when the euro's up, dollar is usually suppressed. Right now, the euro is effectively unchanged. So it's just keeping the dollar under wraps. We're not getting a real tailwind from the currency or rate side. We're getting a tailwind from the oil side and from the earnings side. Now, Caterpillar is up. I don't know. It was up about 10, 11% pre-market. AMD was up about 4 or 5%. And SpaceX is actually up as well, maybe 1 or 2% the last time I looked at it. And we know SpaceX is providing its earnings later on today. Nonetheless, you've got this currency market that is not deterring a further rise in the market. It's not adding a further tailwind. You've got the you've got the geopolitical side covered with oil coming down dramatically again, supporting a risk-on tone in the market. And then you've got precious metals, like you heard me say yesterday, at some point this week, we're likely going to start seeing some glow in precious metals. They may still not be swing-worthy, but there you go. There's silver. It's up just shy of 3% at this stage vis-a-vis yesterday's close. And when we take a look at gold, it's also up. It's not as dramatic as silver. It's up about 0.75%. Now, both are day tradable. I like gold better above 41.35. Trading it up to there is valid while we remain above the top lip of the mattress, 41.14 roughly. And silver has already come up and above local resistance, but it's coming into another resistive structure. If one is looking at silver as an opportunity to trade long on, the top lip of the downtrend channel is the name of the game. It's $60 and about 6 pennies. Above there, longs can actually bloom a little further, and we can end up seeing a little bit more risk on overall. Now, are folks having trouble with any of the AV? Let me know. I saw a couple of comments in the chat there. I'm going to stop, full stop here. Is the AV all working on your end? Because I got a few confirmations. Everything was good. I just want to make sure that it's all good everywhere. And folks are not having any trouble. Okay. So looks like folks are doing okay. AV is good. Is the sync there, the C and the say and all that stuff working? Let me know. If there's a problem, I want to have it fixed before we continue on. There's lots of bells and whistles that I have to click on here. So I want to make sure it looks like it's good. So I'm getting positive feedback in the chat from folks. So I will just leave it right at that. So now you're looking at a chart of gold and silver. We just covered it. I've given you an idea of where longs can make more sense. Let's now take this all the way back to the equity indices, which are dealing with a tailwind, of course, in today's market. So if you look at the big long-term channel that we've been in going back to October of 2022, there's that very long-term channel. The primary market, the S&P E-minis, are actually trying to get into, well, they are in the uppermost quadrant of that long-term channel. So we've just gotten above that lip that divides quadrant 3 and quadrant 4. The value of that line is important. It's at 76.32. Below 76.32, there might be trouble. Below 76.32, there might be trouble. Okay. Otherwise, we are in a market that has got well-aligned signals supportive of up, and away to continue. Now, are we running light on bullish fuel? Sure. Are we very overcooked? Yes. Is the elastic band stretched to an extreme? Yeah. So these things can all result in an unwind if we get a small negative. Now, we don't have a big data coming out today. I think we've got the JOLTS jobs openings data at 10 a.m. Eastern time. Beyond that, I don't think that we have any other significant data points, from economic performance. The earnings that had to come in pre-market, they're already in. That's baked into the cake. So what I want to do is just establish 76.32. That's a key line for the S&P E-minis. Below there, there's probably some trouble. Let's go and do this for the NASDAQ. So the NASDAQ in that long-term uptrend channel is trying to get into the uppermost quadrant. It's not quite there as of yet. When you look at it, it's trying to reach for it as we speak right now. It's trying to reach for it. Now, I'm seeing some folks tell me that audio is still an issue on their end. So give me just a second over here while I try to get that fixed. My apologies. I'm not sure exactly what's happening, but I'm going to try to get that fixed out right now. Okay. Sorry about that, folks. So for anyone that's having audio issues, I hope that they are going to get fixed by the team on the back end. Okay. Okay. So let's get back to getting on the horse over here. So the point that I want to make over here is, where is that number that the NASDAQ needs to get above to open up more upside? So there's two numbers. I would have to say 29,175 to 100 roughly is a very important area of support, and getting above 29,320 really opens the door for more upside action, Okay. So as far as I'm concerned, I hope that is super clear for folks. And I'm still getting messages from the team here. I'm just going to have to, sorry for the disruption. I apologize. When the AV doesn't work properly everywhere, it's not ideal. So I'm in kind of the position where I have to click buttons in order to make sure everything is good for everyone. So bear with me while I'm dealing with that. I'll see if I can fix that right now. Let's see if there's another way to get this done. Okay, that's the best I can do at this stage. So give me just a second over here. My apologies, folks. Folks, my apologies for the technical disruption and delay here. It will be fixed up in just a second for those who may be having some issues. And then at some point, I'm just going to move on and continue to carry on here. So bear with me for just another moment here, and we'll get right into it because we're getting close to the open, and off we go. Okay, so bear with me for just a moment here, folks. My apologies for the disruption. All right, folks, I'm back. I'm hopeful that everything's good with everyone right now in terms of audio and video. If you can confirm for me one more time, I would sincerely appreciate that. All right, so let's see what happened. Looks like it's working all out fine now. Still good. Wonderful. Okay, so the insight again is on the NQ. So we're just establishing levels to work with on NQ. While we are above that little red line, which is the top band of the downtrend channel on the NQ. More precisely, I'll just do it with this chart right over here. While we're above the top line of the downtrend channel that's been in place since June, which is roughly 29,180. The door remains open for us to continue higher up towards this volume point of control line, which is in the low 29,500s. So what we're going to do over here is we're going to transfer this over to now the technical picture. I've already been doing some trading in the pre-market. I'm already up. I'm close to 800 or somewhere around there. I'll share that with you right now, about $838. So I've traded 3 accounts separately. So I do want to continue working to build that live here in front of you. And that's what I'm going to do. Okay, so what I want to do at this stage is just establish some of the barriers and levels that we need to get through as we're about to approach the open. On the daily chart, it's the best way for us to anchor our decision making. The center of the MSR channel on the daily chart is a danger line. It's at 29,045 points. The top of the MSR channel is the target that we're magnetically attracted towards, and the top of that channel is valued at roughly 29,370 and change. Getting to that and breaching it will likely lead to a break and can get us up towards the 29,500-ish area. Okay, so that is that key door to open to get up to the rooftop garden party and enjoy some upside in towards 29,500. Is the market configured and aligned for risk on? The answer is yes. That's fairly clear. So you can see the daily chart is in a counter trend bounce above the center of its MSR channel. The 4-hour chart is in a buy sequence with the PTC pattern, the pre-trade conditioning pattern on the SSS toolkit, and it's in stage 3 of the CTP sequence. So it's all positive. We're approaching the 300 marker right now. So let's just make quick work of this and go whether or not we can actually get into a long right here and now, or is it a little too risky? It's already up and away. I'm going to flip to MNQ to start off a couple of trades right off the bat. because we've already had a very large move. So I want to make sure that I manage my risk appropriately and not do it with the full mini at this stage. I'll add the full mini in as we move forward here. Let this get all filled in. And while that's getting all filled in, we're going to look at the S&P E-minis right now. Bear with me while I pop that up on the screen. Okay, so 76.65, we're well above 76.32. We've got lots of time frames on the screen here. I'm going to compress them. The important point, though, is we've got a buy signal state on a daily chart, 4-hour chart with the PTC pattern, and we've been in a buy signal state since July the 30th on the 1-hour chart. So I'm just going to dock these charts side by side right now. So let's get that done at this moment. And let's see if we can have a little fun with a long on the ES. It's a little overcooked, so there's some worries there, but it's continuing right now. I want to see if I can get into something right here to carry a little higher. I'm not going to stay in it if it takes me back down below that fast speed line, but we've got enough momentum in this market. We've got the right couching. We're already a little stretched, so my first trade's not working out great right yet, but I'm still holding it on the basis of the backdrop being so positive and the 1-minute chart not completing its move on the triple S line. Now, as overcooked as we are, we have to be very careful with positions, but we do have a buy sequence in play. We are rising. The trade looks like it's coming into almost neutral. It's not in the money yet. I'm a little late to the party, as you can tell. A little technical disruption got me a little off there, but now it's back. We're all back and all good. So I'm waiting to see if I can get a little pop up here that can result in some profit from my first trade. So far, we've popped up above my buy line, but we're not just breaking through. So do I still hold this? Well, I'm looking at the 5-minute chart triple S indication. We're above the top of the channel. We know that we need to see the triple S line on the 1-minute chart sustain in the uppermost quadrant. If it's not able to, it can snap. And if it snaps, it can be ugly. We can have bigger pullbacks than you'd expect very, very quickly. But the buying pressure should be in place. I'm seeing the NASDAQ on my other screen continue to support up. And you can see that the trade is in the money slightly right now. I want to see if I can get a little more out of it, but certainly don't want to walk away with too much red on this trade. So let's see if we get that little push up that carries forward here. And the NASDAQ, again, is in control of the move. We're at 29,360. Right, so we've come up to and through some key lines and key levels, in particular, the top of the MSR channel on the daily chart. That's what we're contending with right now. And we're trying to breach it and break it and run. The compression in the speed lines here is a little concerning. If I get a little more pop up here, I'm going to close the trade with a pop up and see if I can get out with a scratch or just a slight profit. I'm going to get out right here. Okay, so I'm out. Unfortunately, the first trade did not work out. I got in a little late, but I've recognized that I'm not seeing the triple S line pop back up into the uppermost quadrant on that 1-minute chart, which opens me up for risk of the back test of that slow speed line before another move up. So can't dig my heels in. Gotta be in risk management mode when I see the risks emerge. Now I'm going to bring the NASDAQ back up on your screen over here. Okay, so here we go. I've got the MNQ in here right now. And one of the things that I wanted to just point out is we are challenging that key area where I suggested to you that, hey, if we come up and breach it, we're likely going to break it and keep going. I think that that is what is happening at this stage. It's just a process. So I'm seeing enough right now to say I'm going to try a little entry here, a couple of contracts on the MNQ, looking for a rise that can continue here. I know it's extended, but hey, the trade's working. Let's see if it continues to work over here. And as I get to my 10-second marker, I'm taking my first profit of the day right there. Okay, I'm going to continue working this same move. I'm not going to take it on the ES. I'm going to keep focused on the NQ. The ES is more so bull flaggy right now. The NQ is just pressing on higher and higher. The impulse to buy is strong. Triple S is uber bullish on that 1-minute chart and uber extended. Same as on the 5-minute chart, which is a concern. But hey, while it lasts, and we are targeting roughly 29,500. So I'm waiting for that righter moment at this stage to see if I can jump back on this pony and continue to ride it north. I'm going to give it a go right here, right now. If we come down below my entry line, I'm probably going to get out of the way. But the trade is slightly in the money. I've passed my 10-second marker. I'm taking my second profit of the day on taking pieces of this move on the way up towards 29,500. So far, got two winners, one loser, unfortunately. But that losing trade is now, it would be, shoulda, woulda, coulda, held on to it. But I want to show you where it could have been resumed. I didn't resume it. The triple S line came back up into the fourth quadrant over there. And that's what would have given the trader the permission to re-enter the trade. We know that we've gotten above a threshold, but the ES is not in control of the tape. It's a benefactor of the geopolitical positive, okay? But it's the NASDAQ that's in control of the tape. So I wanted to press on with the NASDAQ trade, which I did, and you saw a couple of successful trades there. Now I want to wait to see whether or not this is going to be a pullback of a greater magnitude, or is this simply just a regular little pullback before we end up seeing another rise again. Let's see. Okay, so bear with me for a second here. I'm just going to look through the chat, make sure that everything is good with everyone. Looks like everything's good. That's amazing. Okay, great. So now the big question is, are we going to get another resumption? Are we targeting something higher than where we are right now? And the answer is we're targeting roughly the low 29,500s. I established that for you by looking at a volume point of control line that should act like a resistance barrier going back to effectively the beginning of May. So 29,515 is the area. Okay. And Dave, you're asking about news at 10. It's not significant data. It's the JOLTS jobs opening. And then I think it's revised durable goods data. So it's not a big enough data point to really disrupt the flow of the market, but it's still data. So when we have data breaking and we have something calendarized, typically day traders are going to go flat before that. Okay, unless there is a good enough reason not to extinguish the trade. So that's standard fare. I know you were asking something about that before as well, but the standard practice is when there's event risk or there's data, we're obviously going to lower our risk at that moment and then come back in after the data or that event risk has played itself out, if appropriate, of course, if appropriate. And Gerardo, you might want to do a refresh on your system if you're facing any delays, because my execution was lightning fast, as you just saw. So now again, I'm trying to establish for you where we're targeting up to. It's this red line here. It's the area where the most number of contracts have exchanged hands of the NQ since the 6th of May. I think it's the 6th of May. So this should act like a concrete ceiling. Hey, look, if we break through it, that's amazing. But getting up to it right now is in and of itself a challenge in this very overcooked condition. So let's just be mindful of the fact that resumptions to take us higher right now have a range up towards roughly 29,500 and change, 510 points, dozen points or so. And what are we looking for in a resumption pattern? A bull flag, a breakout above what? We've got some negative momentum shifts here at 29,412. So that would make sense. We know that the Champion Trend Pack Toolkit has a sequence of signals. We know that when the breakout forecasters stop and we have an absence of 2 to 3 bars with a bearish speed line cross, we have to reset. It's a new sequence that's starting. It's still early enough in the day to support a continuation, and we're breaking through. So I'm going to buy that break. Okay, on the basis that we are trying to resume the sequence. It might be an early entry, but I'm going to try that entry. My risk management for this should be no more than the speed lines down here at around the 385-ish area. If we come back down and bearishly reverse below it, we're going to be coming back to test one of the lower breakout forecasters before we can reset the sequence. So I'm taking a stab at the sequence resuming right here. We're early enough in the day to provide for that. However, risk management has to be first and foremost here. I want to see that impulse to buy grow. I'm not seeing it. I'm seeing the opposite happen. I'm getting very close to flattening this position if we do not see that fast speed line cross over the slow and action above it. And at this stage, it's just holding. My finger's on the trigger to get out if it does not want to work for me. But so far, it's holding the test of the speed lines, as you can see on that 1-minute chart. And we are still in a buy sequence that's in motion. on the 5-minute chart. And at the end of the day, I am trading the 5-minute chart using the 1-minute chart as an execution mechanism. I'm aware of the key barrier that we just got above. The trade is profit positive. Thank you very much. And I'm taking my $50 or so of profit, $38 to $50 of profit, again, on a continuation or a resumption of the existing move from pre-market through the open. Is it still appropriate to ride the wave? The answer is yes. I want to find the next resumption. For those that are in the trade right now, manage it carefully. We are in rarefied air. We're in a territory where it is not comfortable for smooth sailing up and away. It's going to struggle on its way up because it's got a lack of bullish fuel. It's going to rely very much so on the existing momentum to beget more momentum. Buying has to beget buying, and it has to happen, a bar over bar, if you will. So where's the next area to enter? Well, let's go see on other time frames. Are there barriers? Not on the 4-hour chart. Nope, there's no barriers there. What about on the 1-hour chart? Are there any barriers? Nope, there's no barriers there either. And we're at 435 right now. We're targeting about 515. So 29,512 to 515, that's the targeting area. Now, each time we've got a resumption opportunity, like I just took profitably here again, we have to consider the duration of that resumption. This one's still on. So one that's in this trade is still valid to hold on to it, but below the fast speed line, I would start looking at getting out of the way. Now, I am going to probably take another trade if I get a pullback to the speed lines, or I get an indecision candle on the next bar and then a pullback. I'll take another trade on the basis of that. Right now, I'm not going to chase the move, but those that are in it, my suggestion is trail tighter. I can't tell you what to do, but I can tell you that the rise higher from where we are right now is going to be stressed. We are extraordinarily stretched. The good part about being able to trade at this moment is it's the beginning of the day and there's still a lot of volume here, right? We're still in the first 15 minutes of trade. Okay, so this pullback here could lead to what we saw right there, could lead to that, or it could be a direct resumption. So I can try the trade on a bounce off the fast speed line. I could wait for it to go green and come up above the high and then take it above the high. That would be another option. If it doesn't hold the fast speed line, which it's breaching right now, I can then look for the alternative strategy, which would be a bounce off the slow speed line at 415. And if it's not going to hold the slow speed line, I'm going to have to wait to see if we get several minutes of malaise before we end up getting a nice little bump back up. So we breached the fast speed line. We're headed towards the slow speed line. No trade. We're engaging with the slow speed line on open of the next 1-minute bar. We're breaching it at this stage. No trade on the long side. Not just as of yet. Now, those that are managing the last trade that I took, which was profitable, I'm hopeful that you're able to manage to exit with profit. And if you have a moment in the chat, I just want to make sure you're okay. Right? Were you able to get any of the trades that I took on the way up? Let me know. If you're in a good spot with that, you can just put a lucky number 7 in the chat and share that with me and let me know that you're able to get a piece of the move. You can see me taking pieces of a move in rarefied air. Okay, that makes sense. Riding it, setting it and forgetting it, for those who know who Ron Popeil is, Ron-coing the trade, doesn't make sense. But we are still on a journey that is not complete. The journey is not complete. Even though we are super stretched on the 5-minute triple S chart, we are in stage 3 of a buy sequence. It's not over as of yet. We're in stage 3 of a buy sequence on the 1-hour chart. The 4-hour chart is in a buy sequence as well. And here's your resumption. And I'm taking it right there on that big bullish push up. It's a high risk entry because I don't have the speed lines crossed over properly as of yet. But as you can tell, it's in the money. I think we're going to push up. We're trying to get up to the 500-ish area. And at the 10-second mark, I'm going to take some profit. And unfortunately, this ended up being just 10, 12 bucks of profit, but still profitable. Right? The idea was I brought you to where the next resumption entry is. Now, for those who are holding it, are we going to continue up to the 500-ish area to 512? And again, where is that coming from? It's coming from right here. The work that's already been done. It's the volume point of control going back to May the 6th. That's the line. I'm going to spread the chart out a little bit more here so we can get the precise number. And it would be, let's just call it 515. We're on path to get there. Are we likely going to break up above it and just continue to run? I don't know. I don't think so. Okay, but I don't know whether that will take place. The reason I don't think so is we are a little overcooked and we're light on bullish fuel. The other side of the argument over here is, hey, you've got great momentum and you've got an amazing set of aligned signals. 1 minute charts in a buy, 5 minute charts in a buy, 1 hour charts in a buy, 4 hour charts in a buy. The daily chart for the NQ is not in a buy state yet, but it may be converting towards it in short order. But it has gotten above the top of its moving support and resistance channel, which is something that I identified for you ahead of the bell, right? The value of the channel top at that time was, I think, 29,370 and change. It's now moved up a little bit as time and price have moved forward. It's at 382. It's an important support structure. If we're not going to continue going higher directly from here, it has to be an area where prices would come down to and bounce back up from. That would be the idea, at least. All right. So at this stage, I'm seeing a lot of comments in the chat that folks pick the moves. I'm happy to hear that. And Fuad, that's a great statement. Resumptions are not resuming strongly because of the rarefied air we're in, because of the lack of bullish fuel, because of the cake is baked. It's really overcooked, right? Getting to about 29,500 and change, it's going to burn the cake. So getting out of the way on the way up to that, for those who are riding positions, makes sense. Taking small chunks of the move on the way up makes more sense rather than riding it if you're not already in a well situated position. So let's go back now and dock the chart. So right here, what do we have happening? Well, we had a resumption attempt, took a little piece of it, had a couple of bars down, had the resumption attempt here. You saw me trade that. That resolved to a negative divergence, negative momentum shift, and Wealth Charts is just making it very clear. Don't take a trade again until we break that red ball and white line. The red ball and white line is the momentum shift 2.0 indicator. Breaking above there opens the door for another potential entry, and it looks imminent. My finger's on the trigger, button is depressed. We've broken it. I'm in the trade. Let's see if we get direct continuation. I have to be open-minded over here to this not working out because of the rarefied air that we're in. And of course, I'm going to risk manage myself out below the fast speed line if we so should come down to it. I'm not going to let it run. So my finger is going to be on the trigger to flatten it out. I'm guessing there's others in the position as well. It's likelier to work out. We are likelier to see it come up and break through the high of the bar and continue up. But it may take several bars before that ends up happening. So again, I'm going to have my finger on the trigger to get out if this does not want to cooperate. If it comes down below the speed lines that you're seeing almost intersect, I'm out. There's no reason for me to stay in rarefied air. Where can I take my next trade? Well, it would have to be on a strong rise eating into the wick of that last close 1 minute bar, which may end up happening imminently. So I'm going to watch for it, but I'm looking at that impulse to buy and I'm looking at triple S. I want to see the triple S line on that 1 minute chart get back up above the top of the channel. I want to see the fast spike on that 1 minute chart, the blue line, get back up above the top of its channel and orient itself in a similar manner to what we're seeing on the 5 minute chart. Okay, so there's still a better than fair chance that we're going to go up and make higher highs. There's still a better than fair chance that that's the case. Whether or not one wants to take a piece of the move is, of course, up to the trader. I'm looking right now at some acceleration forming. I'm getting ready to get in. I got in again. I'm in just a small trade. It's working. I want to see if it continues to rip and run over here, or is it done? So it's continuing to rip and run. There you go. And there's your $150 trade. Where is the market? Well, it's at 29,500 roughly. So there you go. I hope that worked. You saw me bring the entry to you. I told you in advance, if I see acceleration eating into the wick of that candle, I'll take it. I took it, $150 trade. Did you get it? Did you get it? Let me know, because it's all about timing, and we found that timing, and bingo, bango, it's done. Now, is it done? Right? We have to ask ourselves the question. Wow, so many of you got it. Amazing. Amazing. Angel, that's amazing. Mario, amazing. Caden, amazing. David C, amazing. So many people are writing in right now. Ken T, who else got it over here? So many folks got it. It's just the screen's just going by. Like Donna, I'm so happy. Vinny, you got it. Amazing. And Vinny, I'm happy you're here. Brian, you got it. So many folks got it, and that's amazing. Kim, I'm happy to hear that as well. Dave, you got it with a limit order. Very well done. Okay, so enough celebration. Amazing to everyone that got it. Booby Bucks, you got it. That's amazing. I like your handle. Who else is in there? Let's see if I got any other names here. That's amazing. Okay, so folks, it looks like lots of folks got that last move. Okay, put the celebration aside. What's the next move now? Is it on the ES or is it the NQ? Which one's very cooked? Well, look, the NQ is coming very close to a major resistive structure where if it breaks through, sure, there's opportunity. I don't want to take a trade into that structure. Right? It's too close to that volume point of control sitting at around 29,515. Okay, we're at 485. If we breach 515, we want to evaluate that breach to understand whether or not it's credible to carry forward. Right? So what I want to do right now is I want to flip the script and look at the ES for a little moment and see, hey, do we have any guidelines for where it can go? Well, let's go back in time over here and take a look at, and this is the U contract specifically. It's not a continuous contract. The high was back over here on the 2nd of June, intra-session high of 76.93 and 3 ticks. What's the high that we've made it up to? 76.82 and 3 ticks. So there is some room up to the high. We're very likely going to tag it. I'm actually thinking ES is probably the better vehicle to ride out the remainder of the move. So amazing. There's so many folks that are still writing in saying they got that last move. I'm super happy, Mahesh. That's amazing. Ollie, you're still in. Amazing. Okay. So let's go back now and take a look at which one to do it with. I've already stated I'd rather not trade the NQ into that volume point of control resistance. And we have to first understand that the NQ is what's pulling the ES up. But right now, as it moves into that volume point of control area, can the script flip? Can the ES pull the NQ up? So look at the shape of the last several 1-minute bars sideways. Okay. And then look at the shape of it on the ES side. Okay. It's sideways up, sideways. I want to see if I've got more up. If this ends up being a green bodied bar and closes above the high of the wicks of the last several, well, the ES is the better bet. And it is doing it. I'm taking the trade. I'm in. Okay, so I'm in the trade. I want to have the NASDAQ on my other screen. So I'm just going to, actually, I have it open on another chart. So I'll just leave it like this. So the trade's profit positive right now. It's growing. And I'm taking $37 a profit or so. Little pieces on the move up. Little pieces on the move up. And Sandy, I'm happy to hear that too. So it's working for folks. I'm happy it's working. I hope the dialogue and narrative is adding a little inspiration, but of course it's the execution that matters, right? So we got it right and it's done well. Let's go see now if the NASDAQ wants to carry forward and break through that 29,512 marker. If it does, hey, we may have a whole new vista for long. I highly doubt that that's going to be the case, folks. I think what's going to happen is we're going to try to get up to the 515-ish area, 29,515-ish area. We're going to struggle, and we're going to have some sort of a sideways pattern that then resolves in a pullback. That's what I think is going to happen. Okay. And while that's in play, I think the ES is going to pull the NASDAQ up towards that 512-ish area, which it is, by the way, doing. For those who got into the last long that I identified for you on the ES, it's still working. It's still working. I took my small piece out of it. I'm happy with that. For those who are still in it, it's still working. I think I'd cut it off below 684. Below 684, I'd watch my back because look, we're in a very, very stretched market. It's extraordinarily stretched. You know, this is where the elastic band has already gone beyond its maximum strength. And Scott, thank you. Jolts is happening in 5 minutes. I know Dave, you were concerned about that as well. So and I appreciate that, Scott. Thank you. As we get, teamwork makes the dream work. So as we get towards that data point, if we're not seeing the ES and the NQ continue to pump, you've got an obvious out, right? Wait for the data to pass and then look for the next move. And I will, of course, be doing the same there with you. So as of right now, I am flat, just waiting on what the next move really can bring us at this stage. I'm just going to bring the ES chart up over here for a moment. I want to just click a few buttons over here. Yeah, okay. All right, that's fine. So on both sides, we've started to see the move slow down. It's not retraced anything of consequence as of yet. You come down below the slow speed line on the 5-minute chart, and you know how extended the triple S is above the top of the channel. Yeah, there's a worry. But here's a little gem, a little tidbit here. When you're looking at the triple S indicator coming back from above the top of the channel, back down to the top of the channel, it is a very high probability that we get some form of a bounce. We don't directly move into the channel. We'll get some form of a bounce at the top lip of the channel. So at this stage, if we're not rising directly right through the highs, I'm not going to take on another trade. I'm going to wait for that high probability moment, which I see time and time again. We're in a buy sequence. That's unshakable right now. It's not something that's broken. The 1-hour charts are backbone. We've had a very expansive move up, about 30 points or so, since the open or since the beginning of the 9 a.m. bar. So all is bullish still. Nothing here to really sneeze at. Let's go and take a look at this. And I'm not sure how many folks have an idea of where that expression, nothing here to sneeze at. If you don't know where it comes from, when folks went to the theater back in the day, they had these little boxes of snuff. And if it got boring, they'd be sniffing their snuff and sneezing. So nothing to sneeze at this stage means that we still have a marketplace that can get right back on the foot, on its front foot, and come right back up. And all I'm doing right now is waiting, and waiting. Well, now you know, Scott. Now you know. There you go. Okay, so we're still in stasis, waiting for a resumption. It's happening on both fronts. I'm well up on the day, almost 4 figures, almost 4 digits. So continuing to grow. Looking forward to building on that. I want to take choiceful trades. I don't want to be in this extraordinarily high risk moment right before data and looking at getting in. I want to make sure that we're through the data and through the structures of resistance that matter. I think that the ES is going to try to pull us up, right? I think that the ES is going to try to pull us up. So we'll have to see. The bar count on the volume profile should be 80, which is the highest number, Mario. And you've got the volume peak at 29,560 from May the 6th. From May the 6th. That could be correct. We can see, I'm going to adjust it on another screen for myself and see if the number changes. No, I'm still getting mine around 515 from May the 6th. And it's the volume point of control as well that matters there, right? Well, thank you so much, George. I appreciate that. That's a compliment on the actual insight. So that's great. Let's see where this thing wants to go, if it wants to grow or no. And data should be out in the next 10 seconds or so. It's the JOLTS jobs opening. I think this is a speed bump, and we continue on higher. I'm just trying to decide whether I want to do it on the ES or the NQ at this stage. And I think I want to do it on the ES. So I'm waiting to see if I get a push through now. I'm not getting it on the ES at this stage. Here's my ES layout. Now, it looks a little double toppy, but again, if it wants to directly rise, sure. Otherwise, I have to wait for a substantial enough pullback. It could be upwards of 15 to 20 points on the way down on the 5-minute chart triple S line back to the top of the channel before it can bounce again. So at this stage, we've triple S students, did it work again? Did it work again? If you're a new triple S student or a past triple S student and you've been with the tool for a while, there's your down. A few bars go by, there's your up. One bar goes by, there's your down, there's your up, and then the very next bar opens up with a double green dots and up and away. Literally, the trade was executable It was not ideal on this bar, probably at the beginning of the next bar or somewhere through its lifespan. But let's say one got it at 76.60. That's another 26, 27 points. Okay, here we go. I've missed my entry by gabbing too much. So I might be in a bad spot, but we are continuing to go. And I want to see if the NASDAQ is leading this. It's not. So it is the ES that's trying to pull the NQ up at this stage, right? The NQ is going the other way at this stage. So I'm going to have to manage that trade carefully. It's in the money. It's in the money. The ES is doing what I thought it would do, pull up the NQ. And look, I'm going to take another, I don't know, maybe a tick of profit at that stage. It whacked right back down. Now, but the idea is you got the entry, okay? The continuation up on the ES is up towards, what was the number we said, 97? Or 93 was the all-time high, 94 roughly. So we still got another 5 handles or so of potential rise until we reach the highs. And ultimately, that's the highs here. All right, so it's right there, 93 and 3 ticks, 76, 93 and 3 ticks. And Tom A is still in. It's still valid, right? It's still valid. I'm looking at it right now. It's still valid. In the end, it's pulling the NQ up to local highs. It's made higher highs. Now, not against the, and now it has again above the last 1 minute bar. No, we've just tagged the highs. So we're above it. Okay. Now, how much further can we get? We are now truly in the land of the unknown in terms of price value levels, all that kind of stuff. So what do I want to do? I want to immediately break the chart apart with a volume profile on a very short-term time frame and understand the lines and levels. Well, the level that can make a big difference over here. So I'm going to just rip this off the screen. I'm going to pull on a 5-minute chart of the ES. Okay, and there's 2 things that we're going to do to this. We're going to grab a channel. Okay, and we're going to have a channel put on it so we can understand the dynamics within a linear regression channel. And then we're going to put volume profile on it as well. So I'm going to start the channel. I think the better source of the move would be right there. Okay, so I'm going to put the channel on. So that's one feature that we're going to have on price. Let me just set it so that it follows price as it should. There we go. Perfect. Okay, good. And then the next thing that I'm going to do is I'm going to put 2 volume profile histograms on the move since, about 9:20 a.m. Eastern time. The first one is going to start right on the bar here. I'm going to just drag it out into the future. Volume point of control is all the way down here, 76.60. The next one is going to be above the pivot level high or pivot range high for the week. So let's get another one on here right now. And what these are going to do are going to give me some markers for what I need to sustain above. If we come down below 76.83, which is 10 handles lower, there's going to be probably a retrace back into this area right over here, where you see a couple of volume profile nodes, call it 76.70 or lower, right? So that's a big danger line for those who are day trading at this stage. The opportunity on the upside is somewhat limited by the top of the channel because we're grinding against it. So on the next bar, I can theorize 7,700 and a point, 7,701 would probably be where the red line would be on the next 5-minute bar. We won't know for another 4 minutes or so, right? This bar is just a minute or so old. But hey, in its lifespan, if it pokes well above the top, I'd rather take profit. Right now, it's still working. Tom A, you still in your trade? You're still riding it? And Yasmin, it looks like you're still in it. That's amazing. Oh, Tom, you said you locked in. I'm glad you locked in. That's perfect. For those who are still in the ES trade right now, let's go see if the NASDAQ's starting to play ball, and it's now come up to higher highs. It's hit that 515 marker. It's breached it. So this is also eventful, right? This is also eventful. Is the baton being passed, to control the direction from the ES now back to the NQ? Well, we have to agree that that is a plausible outcome here, because we are above that volume point of control. We are above that volume point of control of 29,515. So is it valid to just take the long on the NQ from here? This is I'm conflicted. I'll tell you that right now. Number one, I'm conflicted because I think that there's more to go, but I think it's so super dangerous right now that in the role that I'm playing over here, if you're seeing me just slinging more longs, you're like, yeah, the action's there. That's all good. But it can fall apart really badly, really quickly. You can have a 40, 50 point reversal, within seconds. So I'm very conflicted right now as to whether or not I want to make another trade. Like I can do it with micros, of course. I'm not going to do it with minis. And the ES is still holding on largely to the gains. It got up to 97 and a tick. 97 and a tick has been the high. So, about a few points higher than what was the prior all-time highs on the ESU contract have been made. And I'm going back to this chart over here on the ES and looking for any further improvement. And I'm just going to see if I can spread it out even further, because we're looking at a very micro time frame here. So just give me a second to get this back up on our screens. Okay, so this is extreme. This is very difficult to want to buy into. Right? This should be a cautionary tale at this stage. The NQ is in a similar spot, but it has now taken over control of the tape, and it is about 15 or more points above that volume point of control line. Let's go and break the NQ chart up as well, because I don't think I'm going to take a trade here. I think it might be not the most responsible thing to do at these highs. So we're going to do the same sort of thing that we did with the ES. We're going to do that with the NQ right now. Okay, here we go. And the NQ's got a beaten path here, right? We know 29,515 is the volume point of control going back to May the 6th. It is being stifled there, right? This is an area where you heard me say, I think we're going to, if we break 380, 29,380, which I think was the likely case, stated that up front, we're headed up to 512, 515 in that area. That's happened now, right? That's happened. And Stephen E., that's a great insight. Volatility ETFs like UVIXI making higher highs, right? Protection type ETFs have started to become en vogue at this time because we're at market highs. What I want to do here is I want to chop this area up into a smaller volume profile histogram increments to understand where danger can present. So I think I should take it effectively. We had the indecision, we had the push up, we established a base. So it's here that I started. Take it out. So that's the number that we got to be worried about now, 492. Below 492, the move would be described as it's faced that volume point of control resistance from May the 6th, and it's failed to break above. Right now, it can try again, but we're still not below 492. So all I've done is I've added a small little volume profile histogram from literally 9:50 a.m. to into the future, into now, and it's telling me the most number of contracts has changed hands right there for this recent push up, 493, 492. So below there, there's trouble. While we remain above that red line, which is around 515, the opportunity to stay in a long is there. The opportunity to start a new long is risky, but I can't deny that it could work. Okay, I'm just going to become a little more risk averse here and a little bit more conservative. It just doesn't make sense to do it at this stage for me. I'm conflicted based on the nature of the role that I play here in the room, because I don't want folks to think that this is a solid opportunity. It may end up being that way, but it's also coming with so much risk. A level of risk that we have not seen in a little while now. All-time high risk, right? All right. And Jeff, that's a good question, but the better question is who's in control of the tape right now? It is the NASDAQ, and it's above 515, right? The ES has gone flatline up underneath the highs that it just made. The NQ is trying to grind higher and make higher highs and sustain above that volume point of control from May the 6th at 29,515. And it's doing a fine job of it. It's broken the negative divergence. If we were not at all-time highs here, that little breach of the negative divergence should be a reason to buy. And I'm considering getting into one. Okay, I'm going to try it right here. I've down to like 1 micro only. 1 micro only. Okay, but it's not stopping. It's not stopping. So those who are trying to play with it, look, I'm in the trade. It's profit positive. I'm going to take my profit while I have it, not when it's gone away. And this is what it's like trading at all-time highs. The ES is coming back up towards its high. It's now poking above. It's now made an incrementally slightly higher high by a point or so. So everything is still going. Now, how many folks have been able to take something out of this market so far this market morning? Give me a lucky number 7 in the chat and let me know. I have. It continued to be profit positive on the day. You can see that over here. Now I'm above 4 digits. I'm at $1,024 roughly. So it continues to grow. For folks who are continuing to press on here, be very careful, please. Be very, very careful. Wow, those 7s are flying through the chat. Holy cow. Okay. So now ask yourself the question. Okay, is this a good place to do more? You can hear it in the tone of my voice. It may end up being so, but the price that one would have to pay is quite extreme. Right now, we are above that waterline still on the NQ, right? The 29,515 line. We're still above it. Okay, we slowed down in our rise. This is a major area of concern. This is not an area of great opportunity. You go back and you take a look at the work that we did on the NQ, throughout this entire journey. We've popped up above the top of that downtrend channel by a degree that suggests breaking it if we close in such a manner. Remember that the NQ had the weaker position. It came down and broke below the June 9th, 10th, 11th lows, and then came right back underneath it. And it was yesterday where we got back into that range. The ES, on the other hand, was in a stronger position and has come up to the top of its range effectively and poked its hairs above. But this type of a move is so super overextended from last Thursday, right? We've gone from the low 7,300s to 7,700, right? In 4 trading sessions, in under 4 trading sessions. That's a move of size that does not usually repeat and does not usually follow through. Now, at best, I can imagine that we start consolidating, and then perhaps try to continue. We do have SpaceX's earnings after, I think it's in the evening tonight, if I'm correct. And that might be another market enhancer. But back to the NQ on that 5-minute chart, we are holding well above 515. So, I don't want to be the guy that just stalls out the trading and doesn't do anything. I just want you to be very well aware that the risks are considerably higher in this rarefied air where we've already used up all the rocket fuel. And quite frankly, I have to deal with the emotional dissonance of being left behind if I don't take the trade. Okay. So which means, hey, I can't kick myself, right? Can't kick myself if I don't take the trade. If I do take the trade, I don't want to be the guy that says to you, oh, this is a great moment. I want to make it really clear here. Exactly as you said in the chat, Siraj, we're running on fumes now. We are running on fumes, right? If you take a look at, basic tools of overboughtedness, oversoldedness, on any metric that you look at under an hour, even on the hourly timeframes, you're going to see we're extraordinarily overbought, right? So there is going to be this little demon inside your belly now going, time for the shorts to come in. It's profit taking on the longs. This is not a market where sellers are in control. It's those who are holding bullish longs that have taken them on that are taking profit, right? So if we start coming down, I could not even consider taking a short until I see the NQ below that volume point of control from 9:50 a.m. Eastern time, which resides at around now, let's just make sure I've got the right number, 486. So below 486, perhaps. Okay, perhaps there's something to do on the short side. Let me just make sure I've got the right number because it's moving around now, and I'm worried about that. So I want to make sure it's the right number. 485. Fine, 485. Okay, so 485 is the number. If we come down below 485, I'm not saying we're going to retrace the whole thing, but I could consider some scalp shorts, down to the lower 400s at that stage. Look, we are in the gravity well of a major volume point of control line, and the S&P E-minis are up at all-time highs. We just hit 7704, 7705. It's still pressing on. The NASDAQ is struggling. The NASDAQ was in control of the tape wholly. It tried to take over again, but it is struggling quite clearly. The ES is pressing on. So the thought here is, if one must trade, sure, the ES still has some room to grow. Where is it going to go up to? Now, we can use another toolkit, that has targeting, built into it, but I don't want to introduce more confusion or more tools into the room at this stage. Those of you that work with Rob's TRP toolkit, what's your target 1 and target 2 on your 1 minute chart? We should be in a runaway breakout, I'm guessing, on the 5 minute chart, and perhaps even on a 1 hour chart, but the 1 minute chart might have another target above it at this stage. We'll see. Yeah, that quote from Yogi Berra, Brian, is spot on, right? Just like baseball, 90% of it is a mental game, right? So you can see me giving you the raw, real thinking that I'm going through at these highs. I want to be in an ES long trade because I think that we might get several more points out of this, but I'm also very well aware of the risk that it can just get slammed back down if the NASDAQ does not behave. And the NASDAQ is starting to stall out, right? The indices work hand in hand with each other. The differential is, and Tom, no 5 minute targets. I figured that. What about 1 minute targets? Oh, no 1 and 5. Wow. Okay. So in any case, now I don't think it matters as much because we are coming back down below 515 on the NQ. We know that 485 is the danger line. If we come down below 485, I wouldn't want to be in an ES long. The NASDAQ could be dragging the ES down. Then it's taking control of direction to the downside by way of profit taking on the bullish longs taking place, right? And Frank, I figured, right? I figured. So, now comes that moment, right? Now we're at that moment where it's coming down. It's coming down. It's coming down through that 485 line, which can become problematic. Looks like the balance has shifted back up here. So I'm still going to use 485 as the marker. If we come down below 485, we're leaving this location, effectively validating that the 29,515 area was resistance, and it's holding. And look at what just happened, right? I wanted to be in an ES trade. I could have lost easily 6-7 points in seconds. Right. And that's a great point, Brian. We're getting close to the center of the hour. Still got a little time, though. Still got a little time to go. And all of this excitement has resolved in what? Man, I'm hungry. I've been up since, I don't know, 4 a.m. roughly today. Got to bed earlier last night. Tonight's going to be interesting. Julian's coming back to stay with me for he comes to me every Tuesday, goes to his mom the other Tuesday. He's got a jujitsu class tonight, and he's going to be super hungry after that. So I'm already thinking about food at this stage. And well, the last time I ate was around 4:30 in the morning. So yeah, I'm a little hungry right now, and I'm also hungry for a trade. Do I want to try a short over here? Do we have some more downside potential? We probably do. We've come down below 495. I think we hit 485. Let's go see. Yeah, we hit 488. I could try a scalp short here just to play around, but it's not worthwhile, right? This process that now I think we're entering into is going to be a consolidation process with a slight updrift. We have to break some serious structures of support in order to really flip turn the ship the other direction. That's amazing, Alex. Can I read that out to folks? Because that's real trader. That's a real expression. You let me know. Perfect. So Alex D writes to me, it's a great feeling having taken some profits on the run up to flatten out and watch the market teeter totter, right? That feeling has to also be connected with the plan that we had. So my role is to come in and give you that plan, give you that structure, make sure that it's there, and make sure you know where it's coming from so you can replicate it as well, right? And then we can all have each other's backs along the ride. Now, the trading is not done for the day. That is to be sure. But do I want to be in this spot where I'm taking opportunistic shorts up against the all-time highs? Oh, I asked myself the question of, well, when else would you do it if you're at all-time highs and you're coming down below structures of clear resistance, and the NASDAQ is dragging you down below that structure of clear resistance, the 515 area. You know, you heard me talk through that, identify that. I did it in videos pre-market this morning. For those that caught those videos from the Trader Funding Hub or Day Trades Delivered or my strategy video from the Active Trader Room. So you've already seen that number. You've heard that number. And what I said in that video very specifically is, look, if we can sustain above 29,150-ish to 100, getting above the top of the MSR channel on the daily chart, which was at that time at 380, is likely going to promote a move up to that volume point of control line from May the 6th. And we're probably going to stall out there. We're probably going to stall out there. So far, that has been exactly right on. What's the next step here? My next step in those videos, and even to you here, was me saying, I'll need to evaluate it live. So that's what I'm going through right now. What's going through my head right now is we still have good upward momentum. We still have a great signaled market in terms of, you know, the signals being aligned for up and away. We've exhausted our rocket fuel. So my statement to you, I don't know, several minutes ago is, I don't think I want to dabble in the shorts just yet. We're probably going to be in a consolidation with an updrift. So that to me can be proven correct if we come down to the barriers of support now on a 1-minute chart, which I'm pointing to right here, which is below the 85 line. It's at 472. If we breach 472, I could try a short down to roughly 60. There's a dozen points to that breakout forecaster. All right, that could be the next trade that I try, but it's very opportunistic. It's very it's not a solid trade. It's like a little scalp. If we come down below the 460 marker, we're then headed down to the 430 marker. That actually would probably be a better short. But I'm not in a short right now. I haven't seen any of the structures I have not seen in total the structures of support under the 1-minute chart break. So my view presented, I don't know, half dozen minutes ago now, is that we're probably going to have a consolidation pattern, which means sideways with a slight updrift. So a slight uptrend channel is probably going to play out. So far, that seemingly is correct. And I'm going back to this chart that I marked up. We're back above 15. We're at 530, 515. We're at 530, 535 right now. Is it consolidate to accelerate and go significantly higher? That's doubtful in my mind, right? I think this can be very trappy, but it's not going to prevent one from trying little smaller trades. I've got the right configuration. I'm about to get above a negative momentum shift at the highs effectively. If that happens, I'll control your size, but I could try a little scalp, see if I can get 5 to 10 points out of it. The narrative on the Triple S tool has to also be considered here. We've conquered the land for the king and the queen. We've come down to bring them up for a victory tour. We're back above the center of the channel on the 1-minute chart. But all of this is happening with such a super extended condition on the 5-minute chart, and the king and the queen have already moved up in through the center. I'm still going to try it. I think I'm going to try it. I'm going to do it with 1 micro. Okay. It's not an appropriate market to be playing with large size, in my opinion. But if we breach, we're above 515. If we breach the high, 546, we breach that negative momentum shift, it technically gives me permission to try an entry. I don't have to do it at that instant. I probably will. So I have my finger on the trigger. And it's not going to be a big trade if it does even materialize. What I'm trying to look for are signs that, shorts are piling in on top of price. It's not happening, folks. Right? We might get a little squeeze above the high, but I doubt it's going to be of great significance. Now, I heard, in this little community that I live in, this little gated community that I live in, they're doing all of their fire alarm testing stuff today. So you're going to hear some bleeps and blops in the background, and I apologize in advance for that. So I took the trade exactly as I described I would. I'm in it. Took it on one contract basis. 10 seconds of erupted, and I'm taking a whopping $13 of profit. Great. But still, it's adding to the pile. It's adding to the pile on the day, right? That's the whole goal. Just keep adding to the pile. Now, those that are in it, I can't tell you what to do. I can simply say you've seen me take another trade at all-time highs successfully. I'm watching the interplay between the NQ and the ES. The NQ has taken over reins of the market again. It's trying to pull the ES, hold the ES up at this stage. But the ES is struggling. The ES is struggling. Look at the nature of the triple S indicator on the 1 minute chart on the NQ. Look at where the line is. Look at where the triple S line is. It's above the fast momentum line. It's pointed up, right? Now look at it on the ES side. Look at it on the ES side. We're below the center of the channel. Fast momentum line's pointed down. The ES is really struggling right now. It's giving you that clear picture of, I've spent my fuel. It's not starting to use bearish fuel and break down. That would conceivably start below the 1 minute charts channel, okay? But we're not there right now. So the NQ is holding things up and trying to keep the S&P from rolling over. And we're continuing higher, right? We're continuing to pulse higher and grind higher. Where are we going from here? Let's go answer that question. Now that we're above 515, and if we're sustaining above 515, we need to know where we're going. So I'm going to just pull this chart back. Actually, we'll do it on the daily because I've got the markings set up and ready to go there. Let me go find where my daily chart is. I'm sure it's hiding here somewhere. There it is. Perfect. Okay. So the next stop on the train north is exactly where we are right now, 560. It is an inflection point. It's a hollow area in the volume profile histogram. It'll take several attempts to try and break through it if we do. Usually the first two tests of a inflection zone, a hollow area, a concave type pattern in the volume profile histogram, usually the first two tests fail to break through it. So 560 is the number. We've come at it a couple of times, I think, already. Let's go and just look at that a little more closely. Where is my NQ 5-minute chart? There it is. Perfect. Or have we just come up to it once? Yeah, we just come up to it once. My apologies. We perforated it. So it usually takes 3 attempts to break through a hollow area. You can even see it on the 5-minute chart here, right? This white space over here. And then you start to see these gray bands coming in. So it is an inflection point. It's an area where statistically, when you use volume profile theory, you'll come up to it. The first time you'll get whacked back down. Second time you get whacked back down. It's the third or the fourth time that you have the opportunity to do this. And Dan, absolutely, I can give you that layout code right now. Let me go grab it. I think I saved it in a text document so that I don't need to go export it each time, but I don't know. Let me see. Yeah, I got it. I think I've improved it. So I'm gonna use this one. So it looks like it wants to come up at it again now. So that might be the second time, but let me just export it. Actually, no, I have it. It's here. It's right here. Let me copy and paste it, and I'll dump it into the chat. I'll just put it into the chat to everyone. So it's going to be the Triple S toolkit, CTP toolkit, Wealth Chart member exclusive tools, multi-time frame in dark mode. So those that want to import the code into your wealth charts, you can do it very easily. You can simply go to the hamburger menu, go to your layout drop down, and click import and put the code in. Okay, so we're in an inflection zone. We've identified it. We've come up to it once. 560 was the number. We came slightly above it, locked in a negative divergence. It's still a bullish market. If it tries one more time, it'll probably still be rejected. The third or the fourth attempt usually was the successful attempt. And that might be a lot to ask, but we'll see. Right? We've crossed the center of the hour. We're making another attempt to run up into it. Right? I'm not super enthused about it breaking through. The statistical backing would suggest that we will try to come up to it, but get whacked back down again the second time. We've come up to that inflection zone once. We're coming up to it for the second time. Let's see if we break through. We're above it by a few points, but it's not cleared it. Let's see if it does. Is this time going to be different? Statistics say no. And, you know, that's keeping me from trying to grab a breakout trade. But I'm okay with that because I'd rather go with the stats. So we shall see. There you go. That's attempt number 2. Like clockwork. You heard it in advance. I'm not counting my chickens yet because I don't know that it's fully failed, but it should come down to either the halfway marker of this little range or to the bottom and then attempt again. It's so far come down to the halfway marker, but the next bar should open up at that halfway marker or lower. And then if it's going to attempt it, it's going to attempt it. So right now, I'm not fully sure that it's done, but we've got another, 5 seconds or so left of this bar, this 1 minute bar. Let's see if this theory works. It should be down, not up here now. It should be another down, taking us down to the halfway marker or to the bottom of this pattern. And then based on the backdrop of the signals, it should try to attempt a third time. Now, it's not guaranteed that it'll be successful on the third time. The third or the fourth time usually are the areas where it's successful. And this is with wealth charts. This tool is with wealth charts only, yes. So Metalhead, I like your handle because my 14-year-old, who's almost 15 now, getting close to that, when he started playing guitar, he was actually into death metal, like the hardest hardcore metal. He's moved away from that. He's not at that extreme, so he's playing all varieties of music now. But yeah, he's super into playing his guitar, which I'm really happy about. Okay, so there's your second move. Okay, so we had the first move. There's your second move. Now we've come halfway. This can be the third move, and it can break through. So we have to keep our mind open to that. We have to keep our mind open to that. $567 would have to be breached if I was going to take on a long. I don't know yet. I like that lucky number 7 in the chat there. Let's see where we go. So this would officially be the third attempt. And you can see it's building like a coiling pattern. You got a high, you got a low, you got a higher high, a higher low. Okay, and the third or fourth attempt to break that inflection zone usually is successful. But we're obviously at all-time highs for the S&P. We've used up a bunch of the rocket fuel. So, and you can see the hollowness of the volume profile histogram right there. I pointed it out to you on the daily chart and showed it to you on the 5-minute chart, of course, as well. And you can see it fairly clearly here. There's, resistance from volume profile. There's support. There's the hollow area right there, pretty much what we've come up to. And we're facing some challenge there. And again, volume profile theory and how to work with it, I've got very specific videos training on that. They're on Wealth Charts in the on-demand section. If folks want to learn a little bit more about that, I'll point you to it a little later. Let's see if this is successful. So far, no. All right, so we can't call this the third attempt because it did not even get above the last sell bar. So this is still one attempt, second attempt. If it comes down, we shouldn't see it go lower than the lows of the 10:30 a.m. bar if it wants to try again. Otherwise, it's done. It's cooked. It's not going to happen. So a little survey of the room at this stage, folks. Is everyone doing okay? Let me know. Vinny, which one are you talking about? You're talking about the triple S, or are you talking about, what are you talking about? You let me know. Because triple S, I think you already got that, right? So So Triple S, you got it. So what do you? So you let me know. You know, the volume profile stuff is part of wealth charts. It's part of wealth charts. So at this stage, I hope that little educational segment on volume profile filled the gap for the itchy finger, right? The itchy finger. The one that I'm using, which one? Like on screen right now, this chart. This should be you should be able to pop up this layout without any problem. Now, if you've got a Wealth Charts Jumpstart membership, I'm still working on having fewer charts, because I think with the Wealth Charts Jumpstart membership, you're limited to the number of charts you have available to use, right? So I haven't gotten to putting that in, but you've already got layouts accessible with Triple S on it. You can simply go to the hamburger menu, go down to the layout section, and you'll see a section that says Wealth Charts Prop or Wealth Charts Jumpstart, and it'll have my Triple S layout for futures and for stocks separately there. Okay, this is the third attempt. That's the third attempt. So we've had one attempt, two attempts. This is the third attempt. We did make a higher high. If it's going to continue, amazing. But I don't like what I'm seeing over here with the Spike 2.0 tool and the Triple S tool. The Triple S on a 1-minute chart's threatening a bearish cross. We've already got the slow spike coming down on the Spike 2.0 tool. This is not looking good for us to break out and continue. All right, we had a little pop, and now we've got a reversal drop. If we come down below the 485 area, I will actually consider shorts. I'm not going to be joining fundamentally strong sellers, right? I'm not going to be joining fundamentally strong sellers. And Vinny, also come to the class on wealth charts at noon, right? And we can explore more at that time as well. So I'm waiting to see resolution right now, one way or the other. I'm itching to take the short because I do see us coming down to at least 485. It's very high risk. I'm taking it. I scratched that itch. My risk management is the speed lines. I'm only exposing myself to one contract on a micro. If we come back up above 535, 537, no good. Out of the trade. It could very easily just, forget it. All right, scratched an itch, saw what happened, right? Not appropriate yet for shorts. So lesson learned. Okay, we come down. It can still work down to 485, but I'm not going to take another short unless we breach 485. Is the ship actually turning? We don't have that evidence yet. We don't have that evidence yet. But it's been a great morning overall. I'm hopeful that folks have been able to take something out of the day so far. It's slowed down enough to the point where, if, as Alex was saying, it's teeter-tottering over here, is it really appropriate to press on? Is it really appropriate to take shorts on, assuming that it's going to roll over? Neither nor. So, it's kind of be in stasis, find something else to do, time to take a walk. Or if you are watching it. You saw I'm obviously here, and you're watching it. And you're like, okay, that short's starting to come to life. If the itch was there, I took it on a micro, lost $20. That's okay, no problem. But I don't want to be in anything serious on the short side until I know that down to a 1-minute chart, we've broken structures, right? So good lesson from that standpoint. And Jeff, that's a good point. I wanted to bring in the 10-second chart, but I haven't done it yet. And Kemi, what are you saying? You should have access to it all. So Kemi, you should be able to use this layout without any problems, right? I don't have any tools on here that require more than the Triple S or the Wealth Chart member exclusive tools, Champion Trend Pack. That's all there with your Ultimate Wealth Charts membership, and of course your Triple S student. So this should work without any problem. You do let me know. You do let me know. And well, I'm glad, Ollie. The tougher moments are where you get the learning. You're absolutely right. So, Keme, you let me know if there's a problem with that. And of course, feel free to come to the midday session on Wealth Charts as well, where it's a little calmer because it's usually lunch hour activity. And we've got lots of space to explore. So at this stage, I'm not seeing anything that really is inspiring a long side trade or a short side trade. The insight that I gave you about 20 minutes ago or so, we're probably going to move into an up drifting, consolidate with a slight up drift to it. That's been spot on. We tried 3 times to get through the 560 area. All 3 times failed. It's the 3rd or the 4th time that can be successful. If it's going to make another run for that 560 border, okay, there might be another long setting up. Question yourself as to whether or not it's worth the risk at this stage. And that's assuming it even gets there, right? Still have a ways to get there. So as we move into the end of the hour, we should also start talking about end of hour dynamics with the volume that comes off the tape at 11 a.m. Eastern time. So the market is configured net long. There are strategies in North America. There are that come off the tape at 11 a.m. There are markets that close in the Eurozone. That volume that's day trading, the futures indices on the U.S. side, that comes off the tape at 11 a.m. So think about the positioning of those positions. They're not the majority of the market, but they can tip the balance. As that volume has to come off the tape, if the market is net long and we are not rising, it's going to start selling down sooner than later. But there's a very specific window, and that window is between 10:47 a.m. and 10:53 a.m., where one can gauge the direction of the market and forecast what's likely to happen into the last bits of the hour. So in this market today, if we are rising between 10:47 and 10:53 a.m. consistently, if we're rising, okay, if we are rising, then what does that mean for the balance of the hour? If we're rising, we're probably going to see them milk the whole, hold on to the longs, if not buy some more, right up into the end of the hour. If the majority of the time between 10:47 and 10:53 is spent sideways to down, we're probably going to see selling into the end of the hour, right? So we're going to get into that window very shortly. So I'm just waiting to see how the ES responds now at highs, because it's near its all-time high inside the day. And I'm watching to see if the 4th attempt is on to break 560 on the NQ. And of course, I want to gauge direction very specifically during that 6-minute window. Here's a chart of the ES for those who are on that, right? It's a negatively divergent higher high. Like, there's no 2 ways about it. You made a high here, made a high in the triple S tool, made a higher high in price. Look at the location of the triple S line, right? It is a very clear negatively divergent higher high. You can see it on the 5-minute chart as well. Made a high in price, made a high on the indicator, made a higher high in price, a lower high on the indicator is in play. So negatively divergent higher highs are dangerous, especially at all-time highs. So we do have the PTC pattern engaged. Now, Derek, you're saying something about 1 arrow versus 2. My platform has been refreshed in the morning, so I can try refreshing the chart, see if I get anything different. We'll refresh it, and we'll see how that looks. But we're coming up to the 560 marker again. No, I've got the indications right. Why don't you try refreshing your screen on that 1-minute chart? Now, by the way, I've got MNQ in here, right? So there might be some micro differential between the NQ and the MNQ if you're using NQ, right? So there shouldn't be, though, but that could be an explanation for it. But we do have the down, we have an up, we have a down, we have an up. We have 2 sequential bars rising above the MSR channel. It's a PTC pattern, pre-trade conditioning pattern on a 1-minute chart at all-time highs. I'm going to, layer it with a boulder of salt, not just a grain, right? It's still a very high probability pattern. You can see it's still trying, but I have very little expectations for it to work out at this stage. If it works out, that'll just, leave me dumbfounded yet again of how high probability the pattern actually is, that it can work in this extraordinarily extended condition. It's a little nerve-wracking with what I'm seeing on the ES, 77.10. We've been up to about 77.12 roughly, or just shy of that. I'm not seeing it progress, but I'm not seeing it also get run over. We're still dealing with the ES. It's got the double green dots on the 1 minute chart. You can see that right over here. It's holding above the speed lines, but it's a very negatively divergent higher high, right? It's a stark negative divergence. Those usually don't end well for those who are looking for further longs, right? Usually this is the setup for it to get slammed back down again. Oh, the PTC pattern, Ollie, requires 3 signals from the SSS tool at a minimum, separated by no more than 6 bars. And then you're looking for what signal you're left with. And then you need price direction. And we're left with an up here. We've got 4 in total. Then we're looking for 1 bar after the signal bar, rising above the top of the MSR channel with the double green dots from the SSS tool, or 2 bars, one rising, one higher than the other, above the MSR channel to engage the pattern. So the pattern was engageable on close of the 10:44 a.m. Eastern time bar. But again, I did not want to take that trade at these all-time highs, right? It's a very dangerous area to do it. So like I said, I don't have great expectations for it to work out here, but that is the pattern. That's very strange, Derek. Okay, we're breaching the high on the ES. That's happening. So it's trying to lift things up at this stage. And I'm sitting back going, should I just keep twiddling my thumbs, or should I try, a long at all-time highs? I'm gonna be happy with what I've made on the day and not play any further. But the insight right now is we've had 3.5 minutes go by during this very specific window that can help us gauge directionality into the end of the hour. And the majority of it has been rising on the ES, okay? On the NQ, it's been going sideways since 10:47 to slightly down. So they're very divergent, which is gonna make the predictability of the last 6-7 minutes of the market morning a lot more difficult, And what are you saying, Rich? The euro's starting to move? Is it starting to come down? Is the insight, right? Let's just go take a look at it. Yeah, spot on. Good insight. It's back testing the double top formation that it was in, though, right? So it hasn't broken down below there. It could easily bounce here and continue to keep the market levitating until the end of the hour. But it might not afford any sort of solid day trade even, because I've got not consistent directional action during this discount window, 10:47 to 10:53, between the ES and the NQ, which makes it very difficult for me to forecast out the last 6-7 minutes of the hour. So I'm going to default back to something that's very simple. We're near all-time highs. We are just off the all-time high on the ES. The NQ has had plenty of time to come up through 560. It's failed, right? Failed as expected on the first go, the second go. Third go was fail or succeed. And now we are seeing no fourth go, right? We didn't even get, we got to it, and, well, technically it failed the fourth go. So it's giving me some insight that, hey, we're exhausted to the point now where those that are holding bullish longs are probably going to turn into sellers. The ES during that discount window, we're almost at the end of it, 1053, has gone up predominantly. The NQ has gone down predominantly to sideways, right? That's where 1047 was, right there, right? More of the action was down, but we're coming back up to that water line of about 550. The ES has gone up from 1047, and it's in positive territory now versus where it even closed on the 1047 bar, AM Eastern Time bar. So that divergent behavior makes it harder to gauge. What I can say is the ES is trying to keep the boat afloat and pushing higher. So if we're going to take the cue from any index as to what's going to happen into the end of the hour, the ES is saying you're probably going to run up. But the NASDAQ is big and powerful enough to overturn that. Although my insight's going to stand, I think that we're going to try to rise into the end of the hour based on what the ES has done over this 6-minute window. That would be the standard fare. But look, we're in territory that I'm not going to stick my neck out and trade on that. Right? I'm not going to trade on that. Yeah, so I'm not seeing anything of extraordinarily, anything relevant at this stage that's going to say get into a long or get into a short. I don't have any major changes in the macro backdrop to really bring things into more focus to say, hey, this is changing enough to break the market down. But we should take a quick look-see at where we are on VWAP cones and the like to understand just location. So I'm just going to get that teed up on another screen. Positively divergent lower low on oil, little bounce up on it. Could be, the beginning of fracturing of markets at highs. That's probably the best I can come up with at this stage. But we'll take a look at my day trade 2 template here in just a second and see if we can get something insightful out of it. So I can offer this up at this stage. I'll pop this up on the screen. So this is the NASDAQ 100 represented by the QQQ ETF. It's price action from discretely 9:30 a.m. onwards, excluding pre-market. This is a bell curve tilted 90 degrees on its left-hand side. It's called a VWAP cone. The center of the cone is constructed by the volume-weighted average price of the NASDAQ on a 5-minute closing increment basis since 9:30. VWAP is here. The little pink dots here are a half standard deviation above VWAP. The pink line is 1 standard deviation above VWAP. If price sustains above the pink line, we're in an area where we can trend. It's the uptrend zone. And vice versa, if we're below the lime green line, where we can trend down. We've recently departed the uptrend zone, implying reversion to the mean. So unless in the next few seconds it just pops right back up above 716 and about 15, 16, 20 pennies, we're probably on a path to revert to the mean, which would make sense. All right. So does that necessarily, support great shorting? There is a short here below the bottom of the 1-minute chart MSR channel. I want to see if I get one more trade out of this. Green is green, Hassan. I'm happy to hear that. There is potentially a short here, but I don't want to, mess up already a good day. Already 4-digit gain on the day. So, I'm going to not scratch that itch again, right? Remember, I was saying, hey, I'm not going to short this until 485, and I started to consider doing it again, and I stopped myself. That happens to the best of us. So there you have it, folks. I'm going to get into taking a break now. I hope folks, did well in this market morning. You let me know. Let's do a roundup right now. Were you able to walk away with anything on the learning side, on the earnings side, both? You let me know. The ES is moving up into the end of the hour, as would have been forecasted from that window. I'm not partaking in it. Way too expensive. Ollie, how did you know I wanted to run off the desk to grab a snack? I'm starving. So yes, you're right. That's exactly what I was going to do. We're going to take a 10-minute break. I'll come back and answer questions after that. That's for sure. Hey, David C., lunch money's lunch money though, right? And it's okay, man. Hey, every one of us are going to have good days, great days, bad days, sometimes ugly days. We want to limit the number of bad decisions. And, that's the best thing that we can do. Sultan, that's amazing. I am so happy to hear that. That's a great result on the day. Well done. Well done, sir. It looks like folks did well on the day overall. And exactly, Min, it's just staying the course, right? Staying the course. Hey, I'm happy to hear it, Sultan. I'm happy that this is helpful, right? That's my intent. And Joel M., best day this week. Kudos to you, my friend. Well done. Well done. Okay, so you got dollars and your noggin filled, Wes. That's the learning and the earning, right? So well done. I'm happy to hear that. And yes, it did, Ruth Ann, exactly. And you did. Congratulations. I'm happy to hear that. Amazing. Qualified an FFF account. I'm very happy to hear that. And you know what, folks? I'm really hopeful that you're each day that we're together, each day that you experience the room and the insight and the analytics and then the live trading. I'm hopeful that it just deepens your understanding of how to make better trades, better decisions, and go from there. Well, Nelson, that's amazing, my friend. That's amazing. I've had now about 2 or 3 people put in the chat, best day of the week so far. And it's only Tuesday. It's Tuesday, right? Yeah. It feels like it's already Friday. So much has happened since Sunday night in this market. It's crazy. And that's good to recognize that, Min, right? That's a very good thing to recognize. It makes a big difference. Well, I'm happy to hear that, Kendall. Thank you so much. All right. I'm happy to hear that you're learning each day, Gus. That's amazing. And it happens. And I'm happy that you did excellently on the other accounts. That's amazing. That's good. All right, folks, I'm going to take a little breather. We're still melting up here, right? The ES is melting up. If you haven't looked at the ES chart, it's still melting up, making higher all-time highs as we speak. That little discount window insight did work. We ended up rising from 1047 to 1053. And we've continued to rise into the end of the hour and the beginning of the next hour. Now, end of hour mechanics change overall. Look, it's time to, either cool your jets or be on red alert if you're continuing to scrape on, taking on longs from here, because it can melt up in a negatively divergent fashion until it hits that wall, and then it doesn't anymore. I think we did about a dozen trades. Dave, I think it was about a dozen trades in total that were done. I'm in a nice little 4-digit gain. So I'm looking forward to keeping that and continue to build on it. So let's take a break, folks. Let's take a break, and I'll be back here in about 10 minutes, and we'll continue the conversation, if that makes sense to everyone. For those that have to leave, I totally get it. But let's get back to the table over here at 11 a.m. And continue the conversation. Have your questions ready, whatever they may be. I'm going to do my best to answer them and go from there. So folks, for the folks that do have to leave, wishing you the best on your trade and the rest of the day. For folks who are coming back, have your questions ready. We'll just do a little synopsis of the market, a little outlook and potential areas where it can go to. And then, of course, bring our session to a close at around 11:30 a.m. Eastern. Stay tuned, folks. I'll be back here at 11 a.m. Eastern. Well, hello there, everyone. I am back here with you. I hope things are going well. The market continues to melt up. As you can see, the ES is sitting at 77.2021 at this time, in a very negatively divergent rise. Melting up is what's happening, and it's not stopping. The NASDAQ has also gotten back into that uptrend zone that I was describing to you using the VWAP code. So let's go take a look at the NQ right now, get a sense of where it's going. So up and away, we're above 29,600. There obviously has been some trades during this last 10 minutes. I was busy providing my body with a little nourishment. I was starving there, so I'm not in any trades right now. Could there be a trade that continue higher here? Of course, there can be. I would be very careful, with the melt up that we're dealing with here. It's a very extended market is the only thing that I can really add into the mix over here. It's an extraordinarily extended market, not one where I am willing to, set and forget a trade and let it melt up and take me up. But I can take small little scalps, I guess, along the ride. I want to do it responsibly with smaller size, maybe just even stay on the micros rather than try the ES trade. But I'm kind of interested in trying a little bit of both. But I want to prioritize your questions. So if you have questions, this is the time to throw them into the chat. There are lots of things that I can share with you at this stage in terms of the outlook of the market. So I'm going to start with that. For those who want trades at this moment in time, the best I can do and offer up over here is, the NASDAQ is and ES are both coordinated in the rise. The next level that we can get up to on the NQ, because now we've made it through 560, right? We made it through the 560 area. I'm going to just bring up on screen, that 5-minute chart of the NQ, broken out with volume profile in just a second here. And then we can look at that. Give me a second here. See if that's going to pop up. So there you go. So what are we rising up into? 640 would make sense from here, from a volume profile perspective. And then inflection zone occurs at 675. So 640 and 675 are the next two stops on the train north. If this thing wants to continue, those are the next two stops, very likely. Taking on longs over here need to be with, tender loving care. Make sure you give it TLC. And Bob M, for the live support, take the option that allows you to get into the Zoom room, and that should take care of it. You'll get a link for the Zoom room, and you can pop into the Zoom room. You'll have to pop out of the Zoom room here, over here, but you'll be able to pop into the Zoom room over there. That would be the best option that I can suggest to you at this stage. Okay, so as far as outlook goes overall, where is this market going? Let's get that up on screen for you right now. Now that we've come up to higher all-time highs, we have to keep the door open for the insight that we're going to keep going. I'm actually thinking of trying a little trade here up to 640. I'm going to avoid it myself right now. I'm happy with my gains on the day. But let's put into perspective where we may be going here. It's an extraordinarily extended market, but it's a decisive breakout above this sideways pattern on the ES. Now you can see the sideways pattern is encapsulated in that long-term uptrend channel. That's the one that goes back to 2022 October. Okay, we've moved back into the uppermost quadrant of that 4-quadrant channel. It's the top of the channel that we would be targeting. Now, I don't know that we'll make it up there, but I want to just at least put the value of the top of the channel in front of you. It's roughly 78.50. 78.50. So 78.50 is still quite a ways away from where we are right now. Right, we've got that's about 125 points higher than where we are right now. But theoretically, that's where we can go. It doesn't have to be a straight up line. It can obviously be back tests of the breakout area, which is in the lower 7,600s, pretty much where we started the day today for future set. Started at 6 p.m. yesterday, ended the day yesterday at 5 p.m. It's pretty much in this area, 625-ish, 7625-ish. So a back test of that would not be off base, but we don't have any signals right now that say it's going to happen imminently. What we've got is this negatively divergent melt up in the market that is very challenging to want to, buy and hold. Trailing with stops makes good sense in this market. If one is trying to, continue to capture the grind higher or the melt higher, trailing with stops makes sense. Now, I've given you an idea of where the outlook would be projected up to for the ES. Let's do the same thing for the NQ here for you. So the NQ on that long-term uptrend channel, again, going back to October of 2022, it's moving back into the uppermost quadrant of that 4-quadrant channel. It's moved back in there. So where's the top of that channel? Let's go look at it and identify the number. The number is not new highs, but it would be 30,435. Now, where the Nasdaq's moved up into at this stage is a very dangerous area. It's moved it into an area, so between 29,600 and 960, this entire cluster of action is a lot of resistance. So I'm not saying it can't grind through it. It's clearly still melting up through it as we speak right now. So I'm not against trying to play a trade that drifts higher. I personally don't think I want to do it because I'm already quite happy with my gains on the day. But if one is trying to do it, the precise number that we'd need to stay above at this stage is pretty much where we are. But it's specifically 29,612. While we're above 29,612 and we're above that by about a dozen and a half points now, the next stop would be the 640 area that we identified. And then the 675 area would be the next stop above there. Nothing's really different when I look at it here. And above 675, we move into an area that's a little hollower. It's not perfectly an inflection zone, but the next stop would be around 740. So 612, 640, 675, and then 740 would be the numbers that I can provide you as far as what we're likely to melt up to if we are going to keep melting up, all right? So that's strange, Anka. It might be because you want to refresh the template because I refreshed it live and it still shows up exactly the same on my side. It could also be because you might be using the wrong template. Right, when you're using futures with the triple S, you always want to have the futures dashboard being employed, right? That has the F in front of it. If you're using the one that has the S in front of it, or if you've natively put the indicator on the screen yourself, right? Make sure that you go to the triple S settings, go to the gearbox, and make sure that it's set up for futures, right? And make sure the subchart is also set up for futures. So again, by opening that plus sign, highlighting the indicator, going to the gearbox, and making sure in parameters, you've got futures. And of course, you're using triple S Unlimited, the unlimited version, okay? In the subchart, same sort of deal, triple S indicator, unlimited, and you want to grab that gearbox over there, and you want to make sure it's got futures set in there. Right, you don't want the stocks option in there if you're looking at the ES or the NQ or the MNQ, et cetera, et cetera. So if you've got the settings right, then it might be a result of needing to refresh the dashboard, refresh the layout. Right, that would be the other, and pull some data back. Make sure you expose the channel. Make sure all of that's there, and then it should be identical to what you're seeing on my screen. Okay, so let's see. And Ravi, that's a good point. We've reached the path, the peak of the flight path. I think that we've reached a high that's going to be hard to surmount, but I cannot argue against the melt up. It's already melted up, another, 15 points, 10 to 15 points higher than I was expecting already. Could the melt up just continue through the hour? Yeah. At some point, there's going to be a moment of reckoning because we're melting up on declining volume as we rise. We're not melting up on increasing volume. We're melting up on declining volume as we rise, but we're still melting up. So as far as I'm concerned now, I've given you the numbers on the NQ. We are obviously making it up to some of them right now. The next stop is effectively 670 on the NQ. And it's tradable if one is willing to stick with it, right? Stick with it and watch it like a hawk, trail it very tightly. Make sure you don't have the mental stop, but you have the mechanical stop placed in, to make sure the trade does not go awry. At any particular moment, a small negative in this type of environment can become what breaks the back. It's the feather that broke the camel's back. That would be the analogy here. And Rajan, you're saying silver, not all-time highs, but triple top on 1 minute, transition to metal at market highs with yen up and US dollar weakening. That's the idea, right? So you were in yesterday, right? When I started discussing the opportunity for precious metals to start moving this week, they have, right? So we've seen that happen. And my comment on silver and gold this morning in the videos I did this morning, and I think I did it over here, is look, silver above the top lip of the downtrend channel is the next day tradable long. That's $60 and about 6 pennies. So it struggled to get back up there. So I don't see, I see the melt up in the market as the bigger opportunity at this stage. And that's what is really happening at this stage, right? So the melt up in the market has not quit, but it's a dangerous trade to continue to press on unless you're controlling yourself and making sure you have your mechanical stop pre-programmed in so that it's trailing as it melts up. With respect to gold, the insight was, I don't like it until it's back above 41.35. It's still below there. And again, I still see this both as day tradable. If you look at the bigger picture here, I think that we are in a bottoming process at the tail end of a late stage downtrend, which is what you would have heard me say yesterday. And I think that metals are likely to get going this week. So I think we're starting to see that. I'm really a lot more optimistic about the swingability of gold and silver once they get through major water lines. For silver, it's around the $63 marker, $62.40 to $63 in that area. Effectively, it's this high that we want to game against. Right? If we get above this local high area here, which we're trying to so far in today's trade, we have not gotten above the wick of this bar here. But if we get above that, that's not still breaking out of a bottoming process. Getting above the center mass of these 3 bars, of course, the very top of the bar, $63 and change, really does open the door for up, and away. And there we can go. Watch for that being taken out, the top lip of the downtrend channel, which is $60 and 6 pennies for day tradable longs that could then take us on the journey to, center mass of these 3 candles to even potentially above it. It's really above $63 that I would start getting excited about the swingability of silver and, a significant retrace that could be in play. Now, we got to be careful with that because, markets are at all-time highs. There's a positive correlation between silver and the markets. If markets start to crack and, fracture, we got problems with precious metals. So there'll be a downdraft. So then the currency side has to work that much harder. And, the only way for me to understand what to do is I'm going to have to assess it live. At this stage, that's my best thinking on where swingability of silver comes into play. Mid $62 range, low $63 range would be the area. And CR, that's exactly on point. Better to target a lower number of points in this melt up or grind up environment, right? But with a high number of contracts, that's up to the individual trader, right? Like I can scalp, with 5-10 contracts and just keep taking advantage of the grind up. I could let a very small size contract stay in force with a mechanical stop that trails. Neither nor are extraordinarily exciting to me at this stage. You know, the next exciting moment for me really is the pullback now. And look, it might not happen for quite a while. So we might be waiting for that pullback. But alas, we are getting to the end of our time together. I know that there may have been some other questions that came in. For those that want to ask those questions again, please do. Please do ask them midday. But Kendall, I can answer your question very quickly. You know, it is the 11 a.m. one that is the more significant, but also into the end of each trading day at 3:50 p.m. Eastern time, a data point's released. It's called MOX, Markets on Close. So when Markets on Close is released, the imbalances of the shops, the houses, the individual strategies that are buying and selling, and they've agreed on it contractually with themselves, but it hasn't hit the tape. The imbalances are reported at that time. And if the imbalances to the sell side, you'll see probably some downside action in the market. The imbalances to the upside, you'll see some upside. So one wants to look out for that event. But the event of money coming off the table from a day trading standpoint is more significant into the end of the morning and the Eurozone close than it is into the end of the day. At the end of the day, it's what are the imbalances? And then, of course, just manage with technicals into the last little bits of the day. So there you go. All right, folks, I hope you had a great time this morning with me and us in the room. I look very much forward to tomorrow as well. And I see last minute questions coming. What's a reasonable target for the ES has already gone beyond its reasonable targets. That's my best answer, right? So we've already gone beyond our reasonable targets. If we're going to be pushing up again and the melt up resumes from this little pullback that's happening here, I know one wants to have a number to track to. It's not going to be a straightforward answer, right? That we're in no man's land. We're not in a territory where we've got solid evidence of or a well-beaten path with street lights and street signs. None of that is there, right? So one wants to manage it organically. I'd rather not come out and say, oh, 77.50 or 77.80. I'd rather not. I know ultimately, if we are going to continue in the uppermost quadrant of that long-term channel, we could be headed up to the 78.50-ish area, as discussed before I took when I came back from the break. That ultimately could be the very high end target. But right now, today, we're already well over the tips of our skis. So this is not a market to be cavalier about and put your legs up and just feel great about the melt up going. The whack-a-mole moment can come. It's unlikely going to be a slow motion train wreck. It's probably going to be a nasty one on an intraday basis. We start a move that ends up being 30, 40 points down on the ES, that kind of thing. And that would not be off base happening as we move through the day today, right? That could happen before the day is out. So watch your back. That's the number one insight. All right, folks. Well, thank you for taking the time to be here again. Well, thanks for all those nice compliments in there. I appreciate that. I hope folks had a great time with us today. I look forward to more with you tomorrow. And for those who want to catch me on Wealth Charts, I will be there at 12 p.m. Eastern time. Just go to the education section, Wealth Chart events, and you'll be able to get the login for that session. Got to sign out at this stage and wish you a wonderful rest of your day. If I don't get to see you, we'll see you back here tomorrow morning at 9:15 in the morning. Bye for now, everyone.